Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike York. Today is Thursday, September 13th, and we do got a few economic news releases scheduled for today. And we'll start off with the weekly jobless claims. So last week we had 367,000 people applying for unemployment last week. We figured this week would go up slightly up to 370. It actually jumped up quite a bit to 382. So we had 382,000 people applying for unemployment for this reporting here. Now, the next item to note is the wholesale inflationary numbers, the gauge index that we use, which is called the PPI, or the Producer Price Index. And this is for the month of August. So back in July, we had a 0.3% increase in their costs. And we figured for August, it was going to go up to 1.5%, and it actually jumped up to 1.7%. Now, this is somewhat important, but not really important, primarily because not all the times when the wholesale side, when their costs increase, that those costs are passed on to the consumer. So we generally will look at the PCE, Personal Consumption Expenditure, and the CPI, Consumer Purchases Index, as our main inflationary numbers that's passed on to the consumer, but not all the time. Now, if we strip out the food and energy, which creates the volatility in this, we have what they call the core PPI. And so it looks like this. We had back in July 0.4% increase, and then we estimated about 0.2% for August, and that's where it came in at. So basically, it was a lot more tame than what the headline number of 1.7 looked like on there, and obviously it was due to food and energy, or due to energy costs. So the wholesale side of things, with the transportation and everything, with the energy, that's where their costs had gone up quite a bit for the month of August. Now, later today, you'll see the Fed statement. They had the two-day meeting that started yesterday, and then later today, you'll see the Fed's open meeting statement, and then a press conference by Bernanke. Now, the important thing is most of the investors are kind of looking at some type of quantitative easing 3. This is what they're really looking for, because we had a bad jobs numbers last week, so most of them are equating that to some type of quantitative easing. Now, it may not be immediately, maybe towards the end of the year, but that's what they're looking for. If we don't get it, you could see some quite a bit of volatility in the market here as a result for it. So if we jump over the headline news now, the stock market is kind of anticipating this, so it's up a little bit. It's not a lot, but it's up a little bit. Oops, sorry, that's the old one. So let's go ahead and take a look at the bond market. And the bond market is even anticipating a little bit too. So it jumped up to the 10-day moving average, almost about 25, almost 30, about 30 basis points right now. We're up about 30 basis points from where we were yesterday. So we're kind of in good position here, because if you remember yesterday, we also had the bond rollover, which was about 24, 25 basis points upwards, and we pulled back a little bit. So we're in decent shape right now. We're kind of back to realistically closer to about the 103.80 range. We should really be up in this range. So we're actually on the high side of things. So pricing doesn't change on that. It's just what happens is they take that and then they roll over to new pricing for the next month, and that's how it is. But the pricing is still kind of the same in a way. Hope that kind of makes sense there. All right, folks, so actually rates are a little bit better. We have pricing better today on the interest rates, so enjoy it, but be careful this afternoon. About 11:15, we'll see the press conferences, Pacific Standard Time, and could see a lot more volatility in the markets. So be cautious. I'd be very cautious on it, because it could go either way. All right, folks, have a great day. We will see you tomorrow, and thanks for stopping by.